Hello and welcome to another edition of Client for Life. Well, the market continues to stabilise. There's a lot of activity in the home buying market with 73% clearance rate last weekend. Interestingly enough, 10% of properties sold prior to auction, which is really, really great. More than half sold on the day, which is also really good. So what I'm seeing is the homeowner market, which is 43% of our market, is still very, very strong. Predictions of potential prices are really unfathomable at the moment because there's so much emotional drive in that market still. With banks stabilising their interest rates for the time being, we're seeing homeowner lending rates around 4.1, 4.2 at the moment. Seeing investors around about 4.7, 4.8. So as you can see, the regulatory changes are still quite firm. We're seeing a softening. We did expect them to hit 5% plus for the investor market, but we're seeing a range of around about 4.7 to 5.2 at the moment. First home buyer market continues to be exceedingly challenging, and in fact I'm working with half a dozen first home buyers at the moment. My advice stays the same. Try not to buy something that is overly presented. I had a gorgeous young couple I'm working with at the moment sent me a photograph of something they're interested in, but the garden is so perfectly manicured, including a lovely little rotunda with a gorgeous sort of weeping cherry in it. Everything was painted to perfection. That property is as good as it's ever going to be. I really like youngsters to look for good bones and actually get yourself into the property and start living in it and do renovations with some cash flow. So what do you do when you look for a property with good bones? I love 9-foot minimum ceilings. 8 foot always makes you feel like you're sort of having to crouch when you go into the home. Good windows, good design, good size rooms, and obviously structurally well built. So finding good bones is value in itself. When I was in my 20s, I used to go into a property, I used to rip out the lino, I used to take up all of the carpets, everything. The first thing I would do is polish the floorboards, wait for it to dry, then I'd move in and I would work up from there. I would re-stump after I got in if I had to. I would mostly decorate. People call renovating, they confuse it. Renovating is often decorating. Renovating is when you're knocking down walls and putting on extensions, gutting bathrooms completely. But decorating is often putting in a new bath and retiling. So, you know, the differentiator is quite, well, it's felt in your pocket really, isn't it? So I really encourage the youngsters. I know everyone wants it beautiful and it perfect from day one. That is not how you make your money. You often make your money on the way in. And I know myself, I'm looking for a property, a bit of a lifestyle property at the moment. It's all about good bones. It's all about, you know, making sure you don't overpay for it. And how do you work that out? Price per square metre of the land, the intrinsic value of the home, benchmark it out there in the open market. So the market, as I see it, is still at that 43% of homeowners. Add the 5%, you're at 48% of the market is people's homes. Now, there's a lot of talk about the Chinese buyers dying off in the investor market. Let me just put some perspective on this. When people talk about the Melbourne market, they're obviously talking about the CBD, they're talking about the donut, and they're talking about Greater Melbourne, as they call it. When they talk about an apartment, they're talking about an apartment in Frankston and one in the city. It's really important to understand the actual ring that the analysts are talking about, because if you look at the city, the inner city, I actually read an article last week saying, you know, it's all Chinese buyers. Well, it actually isn't. 60% is, which is a high number, but that's not the same as all of them. And also, if you peel that 60%, 23% of the Australian population today are Asian. So 1 in 4 Australians is Asian. So what I'm saying is, when you read a lot of these articles, make sure you really look at the statistics and you really drill down, because in fact, when the donut that we operate in, only 10% are actually Asian buyers. And we already know that 1 in 4 Australians is Asian today. So it's really quite interesting when you look at the statistics. The donut is probably the least affected area by foreign investors, that 10K radius, and it's also the one that is most stable. So, and I simply say that because things that I read, I often read it and roll my eyes, because it's a matter of actually drilling down to what the real percentages, what the real statistics are, because sweeping statements can often be quite confusing. But as I see it, the investor market from our point of view is good. We're just settling in the next 6 weeks apartments that are over 50 square metres in Brunswick that we paid $405,000 for. These are a beautiful, well finished, very retro, funky apartments, over 50 square metres for $405,000. I can't find that value today. We're just settling at the end of this year some apartments in Windsor, Prahran that we did for $8,500 a square metre 2 years ago. I cannot find that value again today. So I think that that's where the safety zone is. When you're looking at the donut and you go to your formula, then that is where the safety is. And I really feel, even though the market might have come back slightly, the market did grow. We actually grew to 13.2% and peeled back to 11.7%. So when people talk about the drop in the market, you also have to factor the fact that the market grew. So I guess I'm really just pushing you all, when you're reading things and looking out in the market, to make sure it's real. And in fact, that was the motivation for me rebranding these videos to Real Talk, because let's get down to actually analysing what's going on in the market. So I hope this has been a bit educational for you. Really, I always love giving you a message, and yeah, I'll sign off on that one. Thank you for listening.